Hi, I'm Brendan Casey, General Manager Investments with Rest. Welcome to our quarterly investment update. In previous investment updates, we've talked about the risks we saw on the investment horizon and how we manage your retirement savings to help protect against the potentially adverse impact of these risks. The December quarter was a tough one for financial markets, with both the Australian and overseas share markets experiencing steep sell-offs. And this impacted returns for super funds across the board. Volatility came roaring back from unprecedented lows, with ongoing trade tensions between the US and China, concerns about getting interest rates just right in the US, and the ongoing question mark around Brexit, all contributing to this pullback. International shares fell more than 11% during the quarter, erasing the gains made over the past year. And the Australian share market recorded its worst yearly performance since 2011, despite managing to outperform most other major equity markets, falling 8.4% over the quarter. The investment returns of super funds over the December quarter reflected this negative tone of markets. Rest's core strategy ended the December quarter with a return of minus 4.79%. Over the past 12 months, the core strategy has remained in positive territory, returning plus 0.15%. And the core strategy's returns remain solid over the long term, returning 8.32% per annum over the past 10 years. For our Rest pension members, the default balanced option returned minus 4.06% for the quarter and minus 0.45% for the past 12 months. The balanced option has also delivered solid long-term investment performance, returning 8.05% per annum over the past 10 years. It's important to remember that pullbacks in financial markets are a normal part of investing. The past 10 years since the GFC have been friendly to investors, so friendly that it's easy to forget that markets will move down as well as up. And that's why we believe a long-term focus for your super savings is so important. A long-term horizon helps to smooth the impact of the day-to-day ups and downs of markets. Over the long term, it's time in the market, not market timing, that will help grow your savings. You can see from this chart how the core strategy has performed against other asset classes, like Australian and overseas shares and cash, through the ups and downs of markets since the year 2000. This competitive long-term performance, delivering performance above the median of similar super funds, shows our ability to manage through good times and bad. We're focused on managing risk through investment cycles with a strong emphasis on protecting your investment, while being able to take advantage of opportunities when they occur. This is why we continue to hold a relatively defensive position for the core strategy, with around 39% of the portfolio in Australian and overseas share asset classes. We're holding around 14% in cash, so well positioned for opportunities we believe will arise as markets correct. Thanks for joining me for this quarter's investment update. I look forward to updating you again on your Rest investment next time.